Australian communities were disrupted by a series of extraordinary events over the course of 2020. AMP responded by finding ways to provide immediate as well as ongoing support. We strengthen the services and education we offer our members, as well as all Australians who we recognise are going through unique circumstances. We'll continue to evolve this support into 2021, as helping Australians everywhere remains our priority. We also know that many of you, our members, have been on the front line providing essential services to help your communities, and we thank you for all that you've done. We'd now like to welcome you to our first annual members meeting.
Welcome to the inaugural annual meeting for members of AMP Superannuation Funds. Thank you for joining. My name is Michael Gomersole. I'm part of the superannuation team here at AMP, and I'm going to be your host for the meeting. I'd like to begin by paying my respects to an ancient protocol and cultural practice of the first Australians. That is to acknowledge the Gadigal and Wurundjeri people, who are the traditional custodians of the lands where we are hosting this meeting from, in Sydney and in Melbourne. We acknowledge the elders of these lands, both past and present, and all First Nations peoples from the various locations of our members. We've had more than 3,000 members registered for today's meeting, which is fantastic. The board and leadership team would have enjoyed the opportunity to meet with you face to face. However, COVID has meant that we're holding the meeting virtually from different locations. Today, you'll be hearing from Tony Brain, the Chair of AMP's Superannuation Trustee Board, Elaine Anderson, Managing Director of AMP Super Business, Debbie Alliston, Chief Investment Officer at AMP Capital, and Shane Oliver. Shane is AMP Capital's Chief Economist. Now, we have recorded this part of our appearance. However, this will be followed by a live question and answer session where we'll be joined by Tony, Elaine, Debbie, and newly appointed CEO of AMP Australia, Scott Hartley. Tony and Elaine are joining us from our Melbourne office, and Debbie and Scott are with me here in Sydney. The directors of the Trustee Board, Tony Brain, Sarah Brennan, Paul Scully, Stephen Roberts, Kerry Howard, Daryl Mackay and Catherine McDowell will also be present today, along with our fund actuaries and our auditor Ernst & Young, represented by John McDonald. Additionally, in attendance today, we have the Trustee Executive of the Superannuation Trustee Office, Sharon Swan, and the Chief Risk Officer of Super, Retirement and Pensions, Julia Pryor. Thank you to those who have taken the time to pre-submit questions. There are some common themes, which has highlighted to us what is most of interest and importance to you. Now, this is your meeting, and the presentations you'll be hearing today are focused on addressing the questions you've asked. You'll also be able to ask a question during the meeting. So if you're watching virtually, you can do this with the Q&A function on the right side of your screen. You can submit a question here, and it will be sent through to our team. We will aim to get through as many questions as possible in the allotted time, but if we don't get through to your questions, we'll address them in the Q&A uploaded to the website after the event. Now, please don't share personal details if you don't wish to be identified. Now, if you're on the phone, you can press star and then number 1 on your keypad and provide your name to the operator and ask the question. We will endeavour to answer your question, but if it's not answered, it will be uploaded to the website after the event. Now, if we don't get to your question today, we'll be publishing responses on AMP's website, www.amp.com.au/AMM. And a recording of today's meeting will also be available online. Now, please be mindful that to protect your privacy, we are unable to answer questions about your personal circumstances during the meeting. If you've pre-submitted a question of this nature, our Member Services team has endeavoured to contact you individually to help. The team will also do this following this meeting for any further personal questions. Now, we're delighted to have the opportunity to engage with you today, and we hope that hearing from our people will give you additional confidence that your super and retirement are in good hands. I'm now going to hand over to Tony, the Chair of our Trustee Board.
Thank you, Michael. I would like to echo those sentiments in acknowledging the traditional custodians of the land. Over 1 million Australians entrust AMP with their super, and we appreciate the opportunity to hear from you and to engage with you through this annual members meeting. And whilst by necessity the presentations this year are recorded, we are hosting a live online Q&A, and we look forward to ideally holding this meeting in an accessible in-person venue in 2022. Being online enables you, our members, who are located throughout regional, rural and metropolitan Australia, and even some who are overseas, all ages and demographics, to easily participate today. We've had around 3,000 members pre-register for this meeting, so welcome to you all. Some of you at the beginning of your working lives, having just started your first job and opened your first super account, while others are nearing the end of your working lives, looking forward to retirement and accessing your accumulated super. You walk across all industries, including many essential services, where you or your families and friends have been significantly involved in the fight against COVID-19. So on behalf of the trustee, I would like to express our gratitude to all who have worked tirelessly to look after the well-being of your fellow Australians and have ensured that life continues as best as it can during a truly extraordinary period in our history. As Michael said, we've received many questions from you in the lead up to the meeting, and we do want to address what is most important to you, our members. So with that in mind, and before handing over to Elaine, I'd like to briefly cover 4 things for you. Firstly, the role of the trustee within the AMP group. Secondly, the role of AMP in servicing you, the superannuation members. Thirdly, I'd like to touch on the trustee's strategy. And finally, cover off 3 important areas of focus ahead for 2021. So firstly, the role of the trustee. The trustee company is owned by AMP. Your superannuation balances are managed through a trust that is legally distinct and separate from AMP. We are responsible as the trustee of that independent trust, which safeguards your savings. And the trustee is responsible for making all decisions in your best interests. And I can assure you, this is a responsibility we take extremely seriously. This is done in a highly autonomous and independent manner, solely focused on members' interests. As the custodians of your super, it is our fiduciary duty to put your interests first and help you live your best possible retirement. And the presentations from each of Elaine and Debbie will provide an overview of how we collectively help you achieve this. The second area was the role of AMP. Various parts of the AMP group provide services that the trustee is contracted with AMP to deliver to you, our members. And during 2020, the trustee updated many of these contractual arrangements, ensuring there was heightened and much clearer accountabilities in place as a result. Might I emphasise that it's in times of challenge like we experienced in 2020, when large, financially sound and long-established organisations, such as AMP, can make a real difference to coming to support those in need. And as it has for more than 170 years, through world wars and countless natural disasters, AMP has continued to be there to help our members and the wider community. And Elaine will talk more about the services and support we provided to members in 2020. AMP itself has had its own well-documented challenges in the past few years. Where such matters could have had any degree of impact on how your superannuation services are provided, your trustee board has stepped in and raised any concerns. We've in turn monitored and been kept updated by the AMP group as these matters have been addressed. And over the latter part of 2020, the trustee has developed a heightened confidence that these challenges have been a genuine catalyst for positive change. We've witnessed significant commitment and actions from AMP to strengthen culture, governance and accountability. And as trustee, we continue to see much improvement in the way AMP shows up for you. And we will continue to work closely with AMP's new chair, Deborah Hazelton, and the board to ensure this continues. I would like to greatly thank the many employees who work within the AMP Group to service our members, particularly given the added challenges that 2020 brought to the workplace. The third area was the trustees' strategy, and the 5 pillars of the trustees' strategy are currently displayed on the screen. This strategy is designed to support members with a focus on competitive product and investment outcomes, operational excellence, and a member-led culture. To oversee this activity, we've added deeper expertise to our trustee board, with 5 new non-executive directors appointed over the last 18 months. Sarah Brennan, Kerry Howard, Catherine McDowell, Stephen John Roberts, and Paul Scully. All are experienced, bringing highly diversity and making strong contributions to ensure your best interests are put first. And along with our longer-serving director, Daryl Mackay, I'd like to thank them all for their contribution during 2020. And finally, there are 3 areas of particular focus for the trustee in 2021. Enhanced investment returns. Debbie will explore this further with you in her presentation. We expect to see continuing improvement in investment returns over 2021 and beyond. 2, the continued simplification of the range of products on offer through the AMP business. And thirdly, further simplifying our structure and the way we invest your super to enable efficiencies to be passed on as fee reductions and enhanced net returns. The improvement program will continue throughout 2021, and for you this means high quality products, competitive fees, improved returns, and enhanced member services, all delivered through a simplified business structure and overseen by a strong and autonomous trustee. So it should provide you with increased confidence that your super is in good hands, with our primary focus to help you live your best retirement. As the chair of the trustee board, I thank you for your continued trust and support of AMP and for joining this annual members meeting. And I'll now hand over to Elaine.
Thank you, Tony. A very warm welcome to our members. Many of you, in your pre-submitted questions, were seeking information about the services we provide you. This will be the focus of my session, and I'll cover 2 important areas. Firstly, member engagement, what help is available to our members today? And secondly, changing, innovating and improving, what you can expect of AMP in the future. And then I'll hand to Debbie, who will address investment performance. However, before we start, I think it's important to explain the structure of AMP super funds so that our members watching today understand what fund they are in. Our members have a broad range of retirement needs. Therefore, we have 2 funds that provide a unique set of investment features and benefits. Our Wealth, Personal, Pension Fund houses our wrap investment platforms, with most of these members in an advised relationship. These members benefit from having a relationship with a financial advisor who can help them to manage and build their retirement wealth. For advisors, we're also investing in our contemporary platform, MyNorth, to ensure it offers outstanding value, tech functionality, and investment choice to help them support their clients. Through our other fund, the Super Directions Fund, we partner with employers, advisors and members to offer a wide variety of features and benefits, including choice super options and our MySuper Lifecycle solution. We have significant scale across the 2 funds. We manage more than 110 billion of retirement savings for nearly 1 million members. In fact, AMP is the 4th largest super provider in Australia. Scale is important because it enables more competitive pricing, together with the ability to innovate and provide new services and benefits to members. Now to member engagement, and I'll tackle this in 2 parts. First, how we have helped members, particularly in response to the challenges of 2020, and secondly, what help is available to assist our members achieve their retirement goals. 2020 was a year when many of our members needed our support. This time last year, AMP was delivering a disaster relief package, including pro bono financial advice to those who had been impacted by the Black Summer bushfires. We also provided over 220,000 of our members with quick access to their super as part of the government's early release scheme. In total, we returned more than $1.8 billion to members in need of financial assistance due to COVID. Our focus now is to help these members rebuild their super balance. For our members in particularly tough financial predicaments, we partnered with Good Shepherd Australia to launch free and confidential financial counselling services. It's available to all of our members and will help you feel safe, well connected, and economically empowered. During the year, thousands of our members and their family and friends benefited from our online education webinars to help navigate the financial challenges presented by COVID. A financial wellness hub was also created, which together with our Insights education site was visited more than 380,000 times. These resource hubs will continue to provide you important and timely information. We also increased the support we're providing Indigenous communities through AMP's new Reconciliation Action Plan. And a key aspect of this plan will be providing financial wellbeing education to First Australians. And lastly, in 2020, we paid more than $2 billion in pension payments to our members in retirement. The entire team at AMP feel fortunate to have been able to help our members and the broader community during a very challenging period. Now to the second topic on member services. What help is available to assist our members plan for retirement? Ultimately, we want to help you feel in control of your retirement planning and that you're doing everything possible to maximise your retirement savings. We aim to educate you on both super and broader financial matters because we know our members who are engaged with their super and finances generally achieve better retirement outcomes. And importantly, we deliver this support at no additional cost to members. It's all part of our offer. Here's one of our education managers, Jess, talking about the support we provide our members.
My name is Jess Arambulo. I'm one of AMP's team of education managers. The team and I are dedicated to helping our members understand and engage with their super and retirement. Every day, I see the positive difference we make in the lives of our members. The most common feedback I get from members is that they get peace of mind from feeling more in control of their finances. We help members better understand debt management, estate planning, budgeting and investment principles and markets. We're also there for our members when they need us the most. Through the volatility of COVID, we were able to remind members that super is a long-term investment and that markets generally recover. As a working mum, another particular passion for me is helping our members who are women. There's a significant gap between men and women's super balances, and so we've created programs and resources tailored for women to assist them in taking full advantage of the super system to build their balances and strengthen their retirement outlook. I recently had a chat with a member about her appetite for investment risk, and I introduced her to a colleague in our advice team who at no cost was able to provide her a risk assessment and recommendations on the best investment strategy for her. I love my job and the genuine difference our team can make to the quality of our members' lives.
Our education services are highly valued by our members. If you would like to register for one of our free sessions, the details are on the screen now. For those of you who are members in our Super Directions Fund, we also provide a phone-based general advice service, again at no additional cost. And this service enables you to take greater control of your super, understand your investments, your super contributions, your investment strategy and insurance arrangements. All of our members also have access to our web portal and app, My AMP, where you can see your whole of wealth picture, a bit like a personal balance sheet. and this is delivered through simple, intuitive functionality, all at your fingertips. Our member engagement program is comprehensive. It recognises the diverse needs of our members. It's not a one-size-fits-all approach, and this is what truly differentiates our offering from other funds. And now to our last agenda item. To deliver features and benefits that you value, we must continually change, innovate and improve. This is why we're simplifying our super business, particularly for the Super Directions Fund, which includes reducing the number of products we offer to allow us to take full advantage of AMP's scale. So how does this benefit members? Well, twofold. First, this means lower fees for many of our products, having already passed on significant reductions to members across 2019 and 2020, we'll be looking to pass on more savings and benefits in 2021. And secondly, it will allow us to invest more in member services, such as our free retirement health check, which has just launched and is available to members in our Super Directions Fund. This service is particularly valuable for these members 55 plus, approaching retirement. This service delivered by a team of retirement specialists who will help you consider your retirement options, such as how much super is enough, how long your money needs to last, and your general pension, age pension entitlements. You'll walk away feeling more informed and confident about whether you're on track for a comfortable retirement or what additional actions you may need to take. For members of our wealth fund products, we're continuing to invest and improve our wrap offer. We know that you and your advisors value seamless functionality, investment choice and low cost. And we'll be announcing more offers and improvements to MyNorth this year, building on our fee reductions in 2019 and the managed portfolios we launched in 2020. We're also looking closely at the insurance design for members, and we will work with the best providers in market to deliver quality, well-priced cover. As the stewards of your retirement savings, we're ensuring we deliver the best services and support to our members. We deeply value our relationships with you, and we want to give you all the help you need to achieve your retirement goals. Thank you once again for joining the meeting. I'll now hand to Debbie, who will discuss our fourth key topic for the meeting, our investment approach and performance.
Thank you, Elaine, and hello to all of our members who have joined the meeting. As Michael said, I am the Chief Investment Officer, responsible for the investment management of a range of products in AMP Superannuation Directions Fund, including MySuper. I'm going to talk about four things today: a short overview of AMP's investment capabilities, our life cycle investment approach for AMP MySuper, which is where the majority of our AMP Super members are invested, and then I'll discuss a really important topic of investment performance. And finally, we'll take a brief view on the outlook of markets. So AMP Capital is AMP's investment management business. AMP Capital is a dedicated investment manager, and the team manages more than $80 billion in member funds. What that means for you is that your super is being managed by a large professional team where size, scale and expertise allows us to take a best-of-breed approach to the construction of multi-asset portfolios. This means utilising AMP Capital's strength in asset classes such as property and infrastructure to invest in high-quality assets designed to deliver long-term sustainable returns, while at the same time using the best global investment managers for other key asset classes, and that could be fixed income, equities and alternative assets. AMP Capital is also one of Australia's largest and longest standing responsible investment managers. That's why AMP has been integrating environmental, social and governance factors into its investment decisions for almost 2 decades, and has been a long-standing signatory to the United Nations-backed Principles for Responsible Investment. In that time, we've established a strong, overarching responsible investment philosophy. And that means, for instance, that funds that AMP Capital manage don't invest in the manufacturers of tobacco, cluster munitions and landmines. AMP is also increasing our monitoring of climate change. and we disclose the carbon footprint of each of our equities and fixed income funds, including those within the MySuper range. As Elaine mentioned, many of you are in advised relationships and make active decisions about your super through AMP's Choice Super options and our wrap investment platforms, including MyNorth. MySuper, on the other hand, is AMP's default offer. It groups members by their decade of birth into age-based investment options, and it's where the majority of our members are invested, and that will be the focus for the rest of my presentation. We recognise that for most of our members, super will be the longest held and most important investment of your life. And as we know, a 25-year-old has very different priorities and goals to a 50-year-old. And we therefore believe that a one-size-fits-all MySuper solution can be improved on. And that's why we developed our life cycle approach. This approach means that members are automatically invested in different investment strategies and asset types based on their age. As an example, members in their 20s and 30s invested in the 1980s fund will be invested in portfolios with more growth asset classes like equities, infrastructure and property, where they have a longer-term opportunity to maximise their returns. Our younger members can afford to take on more risk because they have a long time to make up for any potential losses along the way. And in fact, a market correction actually provides a really attractive entry point for younger investors who typically have low account balances and can then continue to invest at more attractive entry points. By contrast, our older members nearing retirement need to try to protect their super from market downturns. They have larger super balances and need to reduce the risk that this capital base is eroded and that they will not have time to recover losses. As you can see by the example on screen, this is why we progressively de-risk your super investment strategy as you and other members in your fund age, meaning that from your early 40s, your exposure to risk assets is reducing by 2 to 3% every year. This increasingly protects your balance as it grows and as you near retirement. This concept of managing risk and return is central to the life cycle approach and is different to other super funds with their one-size-fits-all approach. Now let's turn to investment performance. When looking at performance, a foundation investment principle is the greater the risk, the greater the expected returns and vice versa. You can see how this plays out in the returns delivered by our different MySuper life cycle cohorts on this slide. Over the last 5 years, we've experienced a relatively stable period in markets, other than the COVID-19 sell-off at the start of last year. Our MySuper investment options for younger members delivered stronger returns over 3, 5 and 7 years to December 2020, as you would expect given their higher allocation to growth assets. 2020 was a great example of why members should stay the course even in turbulent market conditions. The Australian equity market fell nearly 30% in just over 4 weeks, the fastest fall of that magnitude ever seen, but rebounded strongly to end the year in positive territory, as did other global markets. And these events are really a great way to demonstrate the value of our life cycle approach. This chart, a flashback to March 2020, shows how the performance impact of the COVID-19 induced equity sell-off was significantly less on older MySuper members. In effect, the lower exposure to risk assets preserved returns by about 5% when compared to the younger cohorts. For those with less time to recover losses, movements like this can materially change the retirement outcome. The life cycle funds are measured against 2 key objectives: an inflation plus target, as approved by the superannuation regulator APRA, and performance against a neutral asset allocation benchmark. We also measure how each life cycle cohort is tracking against the very long-term objective of the life cycle product, which is to generate a comfortable income in retirement for our members. As you can see in the following example for our MySuper 1960s and 1980s fund, these, and in fact the other age-based funds, are exceeding these objectives since inception. From a relative performance perspective, the funds are also outperforming the median life cycle option in the Chant West Life Cycle Survey, again since inception. Notwithstanding, we know there is an opportunity to improve the performance of our funds relative to others in the industry. We did receive a number of pre-submitted questions from members on this, and we'll be sharing more about what we're doing to improve performance during the question and answer session, and that will be at the conclusion of Shane's presentation. So what do we see in markets looking ahead? Well, in the period since the GFC, falling bond yields and cash rates have been a significant tailwind to all asset classes, particularly equities, property and infrastructure, which have performed exceptionally well. Current government bond yields below 1% and cash rates at 0% globally suggest that the next 10 years are going to be very different. We are continuing to evolve portfolios and looking for ways to maintain performance outcomes into the future. In particular, we're currently looking at how the more defensive component of portfolios can be refigured to include more risk-reducing assets, such as income-generating equities, foreign exchange, and defensive derivative strategies. There's more for us to do, and we really look forward to continuing to work on behalf of members to deliver performance outcomes that will help you achieve your goals in retirement. And I'll now hand to AMP Capital's Chief Economist, Shane Oliver.
Thank you, Debbie. As Debbie mentioned, I'm Shane Oliver, I'm AMP's Chief Economist, and what I thought I'd do today is provide a quick run through as to how we saw investment markets last year, but more importantly, discuss the investment outlook over the course of the next 12 months or so. So that slide there is just a disclaimer, and of course you've got to bear in mind that I'm not a financial planner, and if you need financial advice you need to seek that. But quickly move on to the next slide. What it shows here is the rates of return for the major asset classes that are typically included in superannuation funds. And I've shown those rates of return for the last 12 months, for calendar 2020, and also for the last 5 years. And the thing you note about last year is there were some big negatives in there. I won't go through them all in details, but to be honest with you, things turned out a lot better than might have been expected at the height of the lockdown in Australia back around April or thereabouts. And in fact, average superannuation funds returned 3%, give or take, given your depending on your risk profile and so on. So that was a reasonably okay outcome in what was a very difficult year. So let's move on to how we see the year ahead. And I've got a few key points here. I reckon the recovery that we've started to see globally will continue. Yes, there's been a few rough patches. Yes, there's been some setbacks in parts of the world, notably Europe. But by and large, that recovery seems to be continuing. We see monetary and fiscal stimulus continuing. That's probably going to phase down as the year winds on. But by and large, we're going to see ongoing support from governments for economies around the world. In Australia, we're seeing massive fiscal stimulus. In fact, it's at the high end of comparable countries, which partly explains why our economy is doing so well, along with the fact that we've controlled coronavirus pretty well. We're going to see continued low interest rates. This doesn't make my mother very happy, but I guess she, like the rest of us, have gotten used to it. The Reserve Bank is going to keep the cash rate at 0.1%. They're saying for the next 3 years, I reckon it may not be that long, but at least for a year or two, we're going to see the official interest rates down there at very, very low levels. And we're going to see full-blown QE. QE is jargon for bond buying by the central bank. So I won't go into the details of that one, but it's another form of monetary easing. That backdrop, I think, is very positive for share markets. You're seeing ongoing recovery globally and in Australia, but very easy monetary and fiscal policies and very low interest rates. And that provides a bit of a tailwind, if you like, for investment markets, particularly growth-oriented investment markets. What would you watch? What are the uncertainties? Obviously around coronavirus, I'll come onto that one in a moment. Unemployment and underemployment, they need to keep coming down as they have been lately. Business confidence needs to remain strong. And of course, those tensions with China are a bit of an issue for Australia, and hopefully they can be resolved as the year proceeds. So I'll go through some of the details in relation to that. I know we're all over coronavirus. We've had enough of it. I've had enough of it. And I reckon you have too. But that's not necessarily the case that it's had enough of us, and it's still causing periodic problems. Now, we all know in Australia we've done a pretty good job of keeping it under control. I know we talk about it a lot. Everyone complains about lockdowns. I was locked down for 2 weeks over Christmas. But at the end of the day, we have saved lives in Australia, and that's enabled a quicker reopening of our economy and a safer reopening of our economy compared to many other countries. The chart on the left, though, relates to the global situation. What it shows is the number of deaths on a daily basis, the number of new cases. And the good news is that those lines have been coming down recently. That's particularly because of a declining trend in new cases in the US and also in Europe, the UK, Japan. Lots of countries have been seeing a declining trend. At present, the bulk of that is due to lockdowns and other measures, distancing. But we are starting to see the distribution of vaccines. Now, I know there's a lot of angst about the vaccines, and it's starting to be deployed in Australia. We're not quite there yet, but we're getting there. But the big point to note about those vaccines is that, yes, a lot of them were developed before the mutations came along, but all of the evidence suggests that even though those vaccines won't necessarily stop you getting coronavirus, there's a good chance they will, but even if you do get it, the studies show that they are very good at stopping you from going to hospital and stopping you from dying. And if that's the case, if these vaccines remain effective in keeping people out of hospitals, keeping people from dying, then we can continue to reopen. So that, I think, is critically important and something you need to bear in mind in assessing the vaccines. It's not just about stopping new cases, it's also stopping severe cases. So if that's the case, it gives me optimism that the global economy will reopen this year and the recovery will continue. So if I'm looking at economic conditions globally, big slump last year, no doubt about that. You can see that on the chart. Business confidence collapsed. Recently it's recovered. That recovery needs to continue. And of course, that's shown as what I call a composite business conditions indicator, PMI, on the chart. Needs to stay up. 4 reasons why I'm optimistic about global growth. We're seeing massive fiscal stimulus. We're seeing ultra easy monetary policy. We're seeing a lot of pent-up demand, very high savings rates around the world, and we're seeing the vaccines. Those things suggest to me that that big slump in world economic GDP, the dark blue line on the chart, will continue to recover as we go through this year. On that front, there is some good news. Australia, I reckon, has been doing fantastically well in controlling coronavirus. We've seen a lot of stimulus here. That's protected jobs, protected businesses, protected incomes, enabled the economy to rebound quicker than seen in other countries. And what these little indicators show for Australia, Europe and the US is a whole bunch of indicators aggregated together. So we've looked at hotel bookings, restaurant bookings, mobility indicators. People are asking their phones for directions, credit card data and so on. And they're telling us the Australian economy is actually operating around the level it was before coronavirus. Other countries are still lagging though, particularly Europe. Now I want to talk quickly about the US. We saw a very messy election there, a lot of distressing scenes, but some of them were quite funny, particularly the hair dye running down Giuliani's, Trump's lawyer's Giuliani's face, and of course those very distressing scenes we saw in the Capitol back in January. But the interesting thing is that share markets don't worry about it too much, providing it doesn't upset the economic outlook and providing it doesn't upset the proper functioning of politics. And it didn't, so the share market looked through it. Right now, the share market is quite happy that Biden's coming along, and that means more stimulus in the US, more support for the US economy. Just on Australia quickly, there's 5 reasons why I'm optimistic on Australia. 1, we've seen better virus control. That reflects our institutions, our government working together and the Australian people. Secondly, we've seen more stimulus than many other countries. You can see the details in that chart there. The light blue line, greeny blue line, that's a guide to overall stimulus. We're amongst the high end of OECD or comparable countries. We've got exposure to Asia and China. We're benefiting from very high iron ore prices. We're seeing a recovery in mining investment, albeit from a low level, and our economy is more cyclical than economies seen elsewhere around the world. So when there's a global recovery, we benefit from that global recovery. Now, what's going on with share markets? We all know that interest rates have collapsed. The chart here shows the level of bank deposit rates. They've fallen below 1%. Horrible story there if you're relying on income from your bank deposits. The good news is that the share market is still providing a much higher dividend yield or cash flow than bank deposits are. And we're recently seeing Australian companies starting to reinstate or increase their dividends again. So it looks like the dividend yield will actually go up. Now, what a lot of people do is they say, well, when there's uncertainty around, I'd rather be in bank deposits. Fair enough. But when the dust settles and you can see recovery coming, people start to say, well, I'm only getting 0.3% on my bank deposit. Maybe I can put it in the share market where I'll get 4 or 5%. And that in turn pushes the share market higher. Now, of course, we all know that low interest rates, low bond yields, do mean on a longer term basis that we're going to see somewhat more constrained returns. But for the time being, that's still that flow of money going into the share market. So what's our view on major asset classes? Cash, pretty low returns, reflecting very low interest rates. Bonds, again, very low returns, again reflecting very low interest rates. Share markets, bit of vulnerability there because of in the short term, share markets have run up very fast and they could go through a bit of a short-term correction. But trying to time that is going to be very, very hard. So I reckon on a 6 to 12 month horizon, share markets will do pretty well because of very low interest rates attracting money into the share market and a recovery in economic conditions and profits. Unlisted commercial property infrastructure, right now they're struggling a little bit because of issues around demand for airports and people in shopping centres and office blocks and so on, but they're still going to benefit from low interest rates as well. Finally, the Aussie dollar, I reckon it's on its way to around 80 cents by the end of this year, and we're already getting pretty close to that. So I just want to put things in some perspective. We regularly go through these upsets like we saw last year, and it looks horrible. Look at what these people are doing here. This is near Rio de Janeiro in Brazil. Looks like they're playing with their lives. But then when you look at the next side, you can see what they're doing. So I reckon it's always very important with investment markets to put things in perspective. And what I'm doing here is showing the Aussie share market back to 1900, and you can see that rising trend through time provides good returns. But every so often we have a setback, like World War II, like Spanish flu. Keep that one in mind, Spanish flu. 1929 crash, Vietnam War, the OPEC crisis in the 1970s, and so on. But the trend usually resumes on the upside, providing good returns for investors through their superannuation. So on that note, I'm going to leave it there. I'm going to hand over to Michael Gomersall to take Q&A. Thank you.